Ladies and gentlemen of the crypto space, we're live on a Wednesday at 11:38 a.m., May 26th. It's time to figure out the markets. Volatility is at its max. We have a massive rebound this week, considering the events of last week. The chart on some of these assets is absolutely astounding. And the topic of today is conviction and hedging. You know, we want to have conviction that these assets are going to perform as we've defined in each of our subjective narratives, and there's always the antithesis that our narrative is a fallacy, and that's the purpose of hedging. So how do we handle that from a balance sheet perspective? What does it all mean? And what we've talked about various strategies over the last year and a half, and there's a lot of puzzle pieces to work with and consider and deploy. And what's most important is to avoid excess trading. And this is where the conviction comes in. Excess trading is just capital destructive. Now, there's obviously a lot of persons that are swing traders and they thrive in that type of volatile market where they buy low, sell high, and they're accumulating whatever their chosen principal asset is. Maybe they're accumulating Bitcoin, maybe they're accumulating dollars. But what's most important is that everyone plays the cards that they have, like a game of poker, or their skill set. People have to rely on their skill set. And for my skill set, I don't want to spend excess time. Time is more valuable than anything, so I can't justify that type of day trading mentality. So for me, it's find conviction, hedge accordingly, structure the portfolio like a balance sheet, put capital to work, deploy capital into assets that I think are going to asymmetrically appreciate over time. We've identified the key narratives that are mission critical for these systems to grow enormously: critical mass liquidity, monetary velocity, lending and borrowing, forex markets, capital flow, and that is what I look for and what I think is the most important, and that overwhelmingly helps me find my conviction. Let's get the party started. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Wave Mapper's in the house. Hey, Noah, I locked Curve up 2 weeks ago, and I still don't have any claimable tokens. You probably locked it up end of last week or middle of last week, which was after the weekly emissions. And this week it's still early. I believe they go out around Thursday, probably tomorrow-ish. It's gonna be a heck of a payday this week. It was over $2 billion worth of, or $2 million worth of fees collected. So it's about double about what's been going on. So about 27% APR on your locked CRV, and that is awesome. I've had Curve lock for a long time, and I like seeing those emissions just accumulate over time. It's pretty cool. Pretty cool. Heck of a platform, heck of a protocol. Killis, best monetary policy in the crypto space. Killis is in the house. Always a pleasure. Craig's in the house. Mathis, good morning. Winter in training. Squanchy, my man. Crypto fam. That is the deal. Bad beat. Thank you for all the info you share. You're very welcome. I hope it helps. I don't have answers. What I do is I provide thought processes, ideology, stories. I tell stories. Jay Nice in the house. Finally catching one of the live streams. Yes, indeed. Next play, connecting real world assets to DeFi. You can provide liquidity in return for interest, the loan back to the company. Yeah, sure. I'd love to borrow cash against my house, especially if I can manage it in the way I handle Aave. Um, on the left hand side, house. On the right hand side, whatever the hell I want. And I just manage my collateral assets or manage my health factor. And God forbid my house gets liquidated. So there's going to be a serious change in responsibility when you're putting real world assets on the line. Not that our digital assets aren't just as meaningful. Just saying. Winner and chaining thumb smash, 31 people in the stream, 14 likes. We can do better. Logan, Polygon SDK. Yeah, that's pure fire. From a developer perspective, when I see an SDK, yeah, that's like a juicy jewel. And to top it all off, there's 6 billion plus in liquidity on Aave and a heck of a liquid forex market on Curve, which should have developers drooling, because any developer for any of the platforms that exploded on Ethereum as well as Binance Smart Chain, um, will see that as a capitalistic opportunity. Deploy your protocol onto Polygon, access that amount of liquidity. You know how much capital is going to flow. You know how much monetary velocity is going to spark. You know how much lending and borrowing is going to go through Aave. You know how many transactions are going to go through Curve. Wow. And it's just beginning. You don't even have Oneness doesn't have its pool position set up. Um, uh, there's a couple of protocols that are launching with permanent loss protected pool positions. I wonder if Bancor is going to port to Matic, to Polygon. I would love to see UDV3 and concentrated liquidity. Arbitrum's coming out on Friday. This whole thing, this whole system, whether it's Matic, well, it's Arbitrum, whether it's Optimism, whether it's ZK, man, this is all spiraling into it's May 26th. Next month is June. This is all literally like a perfect setup for exactly what occurred in DeFi summer, except to a much larger degree. DeFi summer launched in 2020 with critical mass liquidity. It's the same thing that I've been talking about with regard to Polygon and it reaching critical mass liquidity, but now it's going to be an expansion because now we have the critical mass liquidity. We have a massive amount of infrastructure. We have critical mass monetary velocity. We have big boys like Mark Cuban and Kevin O'Leary seeing DeFi as business, just as I describe it from a balance sheet perspective. And to top it all off, now you're going to have networks where it's a fraction of a penny to execute transactions, as compared to even during DeFi summer, it was 20, 30, 40, $50 to do transactions. Nowadays, it's 67 Gwei. It's much more expensive. So we're on the verge of literally a frictionless, completely frictionless experience comparable to what happened last summer. If that's not enough to give me conviction, then my current positions don't need to be touched, and all I need to do is manage them on a balance sheet with regard to my principal and my debt combined to make a balance sheet, and I deploy them to as working capital to put it to work to generate income. Principal plus debt equals working capital. That's how a balance sheet works. So if you have cash on the balance sheet, it could be principal or it can be debt. And when you talk about the stability of the legacy financial system, you hear the word solvency talked about quite often, where liabilities exceed, capital or assets. Liabilities exceed assets, and you have an insolvent situation for a company. So what matters is you're able to service your debt, deploy your assets, your principal and your debt as working capital, and that's a business. Remain solvent. Manage your business properly, responsibly. Don't go long. Don't go short. Don't take on leverage. Deploy 1x. Borrow dollars, use dollars. Borrow Matic, use Matic. Don't convert the assets from one to the other, especially from a debt perspective. Whatever you borrow, deploy it, and then it's not an excessively risk play. What you're doing is you're using your balance sheet. You're not abusing your balance sheet. We talking about a retrace? So based on this chart, I don't know. So let me zoom out a little bit. Or let me move it up a little bit, and I'll talk about it. Captain Weber, always a pleasure. Squanchy, am I going to be in the Miami for the BTC conference? Well, I'm about 30 minutes from Miami. I'd love to. I got pesky day jobs. We'll see. We'll see, my friend. 10-year-old Bonnie loves your stream. Love you from Dublin. That's right, Dean. It's my pleasure. My daughter just turned 6 this past weekend, and she's going to be 10 before I know it. And I know the feeling. She's a big girl already. Just changing diapers a couple of 5 minutes ago, it feels like. Little Pop Tart. Um, Let me get back to the screen to the chart, Captain. In a second, let me hit these comments. You're welcome, Eduardo. I hope it helps. Jackson, have you noticed the 10% discount price on Matic when comparing to the price on Matic? Yeah, so I can't account for it entirely. It's slippage. It's whatever it is. There's ample liquidity in the system. The only thing I could possibly think of without additional information is that it's just an ascent a monetary network. And then, for instance, there's no arbitrage from centralized exchanges because of the friction on the bridge. Not that there's that much friction because it's 8 minutes to get capital in. It's about 1 hour to get capital out, and that's not horrible. Um, it is the week if you want to get Matic out over Plasma. So there are things to consider, and there are friction points. But what I have finding my conviction in is once capital is in, I'm able to work the capital. If I could, my business is working. If I'm able to generate returns, I could convert to something that a stable coin that transfers over the bridge seamlessly to Ethereum, and I'm able to extract capital, ACH into a bank account, good to go. My business model works. My payment rails work. Capital in, capital out. I have the flow, or I have the sequence of events I need to execute on, and actually get capital to flow in or out. Uh, Trevor's in the house. Vince is in the house. Kai, good evening from Singapore. Always a pleasure. I love the big world. I love this big world. Happy birthday to your girl. Thank you, Gia June. I appreciate it. Um, Eduardo, best thing to do with 6K on Curve? It's already beautiful. Curve is a wonderful platform. It depends on a lot of factors. There's no simple answer. That is not a simple thing to contemplate. Captain wants me to look at the chart. So here's the deal. This is the bottom line what this chart says. This was a massive, massive, massive falling wedge. This is a fake out breakout. We've seen it time and time again. So this falling wedge was indeed bullish. This is one of the largest bull flags I have ever seen. It's 100%, pretty much 100% from. It's more than 100%. It's from 78 cents up to $1.97. This is the largest flagpole I have ever seen, and that bull flag broke out. And now we have another flagpole. This is pretty much a broadening wedge. This is a very interesting period in time for the chart because I wish it was like an ascending triangle, but this is definitely a broadening wedge, megaphone type pattern. So this can break in plenty of different directions. I'll draw it so you guys see it. I mean, it's pretty straightforward. Something like that. That's a big old megaphone pattern. Um, so eyes on. I have my conviction. My capital is here, and it's working. My business is as operating as normal. So this is not my time or interest to reallocate principal. I'm moving around debt. I'm putting capital to work. I'm contemplating strategies of how to best consume my debt to make the most capital gains possible. And that's where I am in this market. I mean, seriously, we got a falling wedge, fake out, breakout, massive bull flag, rips to the upside into a megaphone on top of a giant flagpole because that's a flagpole from $1.69 to $2.30. Okay, yeah, this is. I have no interest in trading anymore. No interest. I was able to do very well yesterday. Not that folks really need to hear how well I'm doing. I want you guys to do well. But I pretty much sold right there, like $1.97, and I pulled a swing trade down to probably $1.50. Um, Pretty much near the 200 EMA on the 30 minutes. So that was like, I'm surprised. I don't do that, and I don't like to do that. And I was staring at 1 minute charts all day long. That was no fun. That's no way to live. And that's exactly why I talk about the topics that I talk about because it's not sustainable. I was exhausted at the end of the day. 10 o'clock at night, my eyes hurt, and that is no way to execute on a business. Props to people that could swing trade and do that day in, day out. It's not something I'm interested in. Watch the video with Kevin O'Leary and Anthony Pompliano, and that's exactly what I'm doing. Interestingly, I was doing that before well before. This has been a long time that I've been executing on that kind of ideology, and it's fascinating to see a financial mogul doing the exact same thing that I'm doing. Leo's from Denver in the house. It's nice out there. In any case, after running up 2,000%, I'm okay taking a 10% haircut to sell Matic on Matic. Well, I cannot argue with liquidating to another form of principal. Is it to cash? Is it to another asset? For me, on Polygon right now, it's the only place to operate. Arbitrum is not live. It will take time to deploy. We'll know more on Friday. We know there's a bunch of launch partners. We know that Polygon just released their SDK today. We know that the total amount of capital on Aave just keeps going up. Stanley from Aave literally just said he bets that Polygon will have more capital than Aave V2. That would be extraordinary. That would be extraordinary. The fact that Polygon almost has as much capital as Aave V2 in about a month and a half, that is beyond extraordinary. That is critical mass of something like I've never seen before, and I don't think anyone else has. That is critical mass liquidity that the legacy financial system you don't see things like this. The pace of adoption, the pace of capital flow, the birthing of monetary velocity in a brand new financial network, this is just jaw dropping on the floor. I wish Lynn Alden would talk to what's occurred, because she's a historic person, meaning she compares events over historic timelines. I wish she would dig into what's occurring from a monetary velocity standpoint and capital flow, as compared to not only what's going on in the legacy financial system, but also to how things have played out, over the last 100+ years. I think that would be an incredible comparison to see come from such an astute mind such as hers. Leo, what made you swing trade yesterday? Pure insanity. I will not be doing that again anytime soon. I have more important things to do with my time. Um, so, and it worked out well. I was able to claw back to probably about total capital I had about 2 weeks ago. And now that this broke out, I'm getting close to all-time high at this point. But I found conviction down here, and that's swing trading is not. There's no science to it. Um, it could have easily just plummeted another 20-30%. So I actually, whatever, for what it's worth, I basically had all liquid capital in Matic right down here, and I basically sold it. Right, you can't make this shit up. You can't, because it can't be planned. The fact that that played out, I can't. I don't really have words for it at this point. I literally sold it like $1.95, and I had basically all my capital, liquid capital, plenty, like 15% of the portfolio is allocated elsewhere, at probably 77 cents. And it just ripped the whole way, and I sold up there, and I got in, and now I'm done. So it went. You can't make it up what happened. Nobody buys the bottom and sells the top, especially intentionally. I just extraordinary. I don't have words, because that is exactly what occurred. Bought the bottom, sold the top. Is there a way to go into Polygon Avi without going through the bridge? No, you need to go over the Matic bridge. What do you think currently about DGB compared to all other opportunities? Opportunity cost is paramount. Matt and his DigiAsset X is probably the most important thing going on for Digibyte right now, in my opinion. Protocol upgrades, sure, they mean a lot, but with regard to functional use cases, Matt's DigiAsset X is extraordinary. And obviously, um, Anthem ID. But they don't have critical mass attention. So there's no velocity on the network. There's no collateralizability. Um, so it's missing critical factors that drive capital flow. Um, so what Digibyte is right now is a massive opportunity cost. Albeit it doesn't mean you can't have an irrational uh, irrational exuberance where the price just runs and runs, which is exactly what we saw in 2017. And in which case it would run to like $1 at this point, considering the inflation in Bitcoin. So like 170 sats, I believe, and so that's it just doesn't have the attention it needs. It's not plugged into DeFi the way it needs to be. It's not a collateralizable asset, and it's just not going to outperform for any logical or rational reason. That does not discount my interest in it from a technological perspective. I think it's an extraordinary UTXO blockchain, and I think it's far superior to that of the Bitcoin implementation. And I would it'd be an honor to work on it from a development standpoint. From an investment standpoint, there is way too much opportunity cost, and it's not something I would allocate capital to at this time. Um, Francorp, hi Noah, you planning is meticulous and complicated. If you suffer a severe stroke, suffer from fatal heart attack, how would your wife execute a deal with the complexities? I think about that all the time. My wife knows how to interact with the ledger. My wife knows how to interact with these DeFi protocols and sell assets. Um, the problem is that selling the assets would be a mistake. What she needs to do is be able to operate the business. It's like if you inherit a business that's making them $300,000, $400,000 a year, do you learn the business or sell the business? Selling the business means you no longer have an income; you just have a large lump sum of capital, which is losing value at a rate of 15% per year. So that's a very big thing, uh, Francorp. That's a big complexity that I think about all the time, and my wife thinks about all the time. I don't have any answers. What we really need is a emergency exit button. Smart contracts written on Ethereum L1 that plug into L2s and plug into Polygon where you execute it. It costs like $5,000 to execute the contract and gas fees, maybe even more. But it liquidates everything, and literally you get a USDC deposited to your Ethereum address. That would be extraordinarily powerful. Uh, Maximum liquidation. That'd be crazy. All right, so the market looks good. I have my conviction. I'm not trading. I'm not doing anything like that. I have I have I have debt on the balance sheet. I have principal on the balance sheet. Every asset is working, generating capital, generating returns. The business is fully operational. I believe this summer is going to be extraordinary, even if we have depreciative volatility. Um, I don't feel discomfort thinking of that at the moment. The price has appreciated significantly over the last 2 days. I have significant cushion, and I have no interest in liquidating anything for cash at this point. Um, not, I don't want to say there's just upside from here because nobody knows what the heck's going on with markets. No, nothing's guaranteed. Gold is ripping. The dollar is plummeting. Can we have a deflationary event? Sure. That's not what gold is saying. Gold is saying we have the market pricing in inflation. The dollar dipping, the same thing. I haven't looked at bonds. Follow Stephen Van Meter for the latest on bonds. I haven't looked in on them. Um, but if we have a deflationary event, that's where cash comes in. Cash on the balance sheet is basically deflation protection. You probably should have physical gold, physical silver. I know I do. Um, all in custody in an IRA and all protected in that regard. And I also have the equities that I talk about: lithium, cobalt, nickel, and graphite. Those are just old assets, so I am hedged in that regard. So if we have a commodity super cycle where tech stocks just go to the floor, and all of a sudden energy and mining and precious metals, that's the play, and that's the play. A commodity super cycle would put everything on the commodities list, mining, metals, materials, concrete. It would just go 10x, 100x. Be a heck of a super cycle. So the hedging is important. And in many regards, crypto is a hedge on the legacy financial system. Um, Crypto is in many regards gold, even not Bitcoin. But the difference being, as Kevin O'Leary said, is you could actually put these assets to work. Imagine earning 5% on gold. It changes everything. So the cap, when he said that on Pomp's broadcast, I'm thinking of other business people that are just like him, and there's countless just like him that are like the business opportunity is there, and now they're salivating at executing on business, putting stagnant equity to work. Every business mogul, every corporation has equity that's just doing jack shit, whether it's cash or bonds or stocks, and it's just stagnant, doing nothing, generating no returns. And even if it's like a preferred stock or a regenerating 5%, it's still ridiculous compared to what you could do in DeFi. So that's where I find my conviction that capital is just going to keep flowing in because the opportunity is enormous. Um, yeah, Killis, that was a good question. I have to give that more thought and plan more with the wife. Instructions always work. Instructions and tutorials. Missed the stream for a while. Where can I find an introduction to the business? Dommel, I've been talking about this concept for many streams at this point. I'm not going to rehash. I need to end the stream now. But remind me at the start of a stream tomorrow. I'm happy to talk about. Put some words, an introductory words to it, and we'll go over the concept from top to bottom. Thank you all for joining. 12:05 p.m. on a Wednesday, May 26th. Discord is hot as fire. I'm in there all day long. I love it. 72 people in the stream, 29 likes. We can do better. Office hours, I got in a couple yesterday. I'm trying my best. As always, tell everyone to subscribe to the YouTube, and I will see you tomorrow. Peace.